Sign up to our business newsletter. The recent Panorama documentary on the Paradise Papers has once again raised the thorny issue of tax avoidance and tax evasion. While the superrich and corporations appear to be pushing the boundaries in terms of tax planning, it should be emphasized that tax avoidance is not illegal, but tax evasion is. Denis Healey, former chancellor, famously remarked, "The difference between tax avoidance and tax evasion is the thickness of a prison wall." Most people want to minimize their tax liabilities, but also want to make sure they are obeying the rules. So, what legitimate tax planning opportunities exist? Registered pension schemes. It is possible to invest up to £40,000 gross into a registered pension scheme in the current tax year. It is also possible to carry forward unused relief from 3 previous tax years, provided you have sufficient earnings to support the payment. A payment of £40,000 would effectively cost £24,000 for a higher-rate income taxpayer who enjoys 40% tax relief. The same payment of £40,000 would cost £32,000 for a 20% income taxpayer. Higher earners may have a lower annual allowance, which is tapered according to earnings, and may reduce their allowance to £10,000 gross. Individual savings accounts ISAs. The ISA limit has been increased to £20,000 per annum, and there are a variety of investment options available. These range from cash or investment funds to alternative investment market shares, offering strategies to accommodate any saver. ISAs allow tax-efficient growth, a shelter from capital gains tax (CGT), and the ability to make tax-free withdrawals if required. For those with higher risk appetites, investments into venture capital trusts or enterprise investment schemes could be considered. Venture capital trusts (VCTs) up to £200,000 can be invested in VCTs, with income tax relief at 30% available. Dividends received are tax-free, and there will be no CGT on sale provided they are held for a qualifying period of at least 5 years. Enterprise investment schemes ISA income tax relief of 30% on investments up to £1 million is available, provided they are held for a minimum of 3 years. There is also the potential for 100% relief from inheritance tax, which is available after holding the investments for 2 years and provided the shares are still held on death. VCT and ISA investments should form only a small part of a well-diversified portfolio for those willing and able to accept the higher risk they represent. Tax relief is available only on the actual amount of tax paid. These schemes allow significant sums to be sheltered from income tax legitimately. Paul Gibson, MD of Bankery-based Granite Financial Planning. Sign up to our business newsletter.